What's up, YouTube? Welcome to this week's Forex market analysis for the week starting from Monday, the 20th of October to Friday, the 24th of October. So this is to give us a heads up on the assets we are expecting volatility and which day we are expecting such volatility. So we'll go ahead and look at our economic calendar starting from Sunday. I can see we have red folder news on Sunday, which is NZD. We have the CPI for NZD on Sunday around 17:45, which is the market open for the week. So on Monday, we do not have any news at all. On Tuesday, we do have CPI for the Canadian dollar. On Wednesday, we have CPI for the Great Britain pound or the Great British pound. On Thursday, we do not have any news, but on Friday, we have lots of news. We have Euro news, the GBP news, and the USD news. USD, we have the core CPI, which is going to have a lot of volatility on Friday. So if you are trading Friday, make sure you actually take into consideration the CPI month over month and year over year for the US dollar. So this is the analysis we have for I have for the economic calendar. Pay close attention to this information we have here. US government data may be impacted by the shutdown. Tentative events are subject to delay, revision, or cancellation because the US government, I think the Bureau of Statistics, I think they are still on lockdown. That's why we did not have any non-farm payroll data release for this month. This is because of the shutdown they have. And most of their economy, news and everything is going to be affected because of that shutdown. So take note of that. So let's go into the trading view to see the pairs that we have this week and how we can approach these pairs. So guys, this is our DXY and we are starting the top-down analysis from the monthly time frame. So on the monthly time frame, what I can see here is this swing low that we actually readed, and we are creating another swing low with this indecision candle. You can see this current month is already pushing to the upside, and if you look above this swing high, we have this fair value gap and this fair value gap also. So these are not ordinary fair value gap, these are breakaway gaps because price moved aggressively from this price level. That is why we have them as breakaway gaps. And look at how long it took us before we are trying to return back into this price level. So on the monthly time frame, we have this area of inefficiency, and we have also taken liquidity below this swing low. So the next thing, since we have taken liquidity below this swing low, the next thing we should be expecting is price to push to the upside to take liquidity and also balance price. So that is all for the monthly time frame. So let's go down to the weekly time frame to see what we have there. So on the weekly time frame, we can see the same look that we saw, and we are pushing up already. So on the weekly time frame, our target is this swing high that we have here. And although this week was a bearish week, but we are still expecting price to continue to the upside. On the weekly time frame, there's no much data to actually read, but we can see that price is still going to push the upside. So on the daily time frame, what we can see is after we took out that liquidity here, price pushed up and took out this level, which is where we'll have our CISD, change in the state of delivery. After that, we have this fair value gap that price retested. This was our first order flow leg that we respected before we create this order flow leg. And you can see how price reacted into that fair value gap. We respected it massively and we push up. Now, price has also created another order flow leg. Are we going to respect this one also? We don't know. We just wait for price to tell us what is going to happen and we follow. So if you look closely, you can see that we have area of inefficiency here where we have this volume imbalance and this fair value gap. And you can see that price has traded into it and we are reacting away from that. So that means currently this price level is holding price. So we should expect price to push to the upside, and we're already doing that. So the thing is, are we going to continue pushing up, or are we going to use this fair value gap to drop lower? We cannot say. We just need to monitor price and see what price is going to do. But note that we are already respecting this fair value gap here and this imbalance level. We are respecting it. So if we are respecting this one, that means our target is going to be this high, but we have a little bit of problem, which is this daily fair value gap. So we need to see how price is going to react within this price level. If we close above it and inverse it, making it an inversion fair value gap, then there is tendency that price is going to continue pushing higher. For me, this week, I'm expecting this week to be a bullish week for the US dollar and other dollar related assets. So I'm going for bullish dollar this week. The next asset we'll have is USD CAD. USD CAD will start off on the monthly time frame as well. So on the monthly time frame, we can see we had this massive push to the upside. Then we have this massive push to the downside. After that, we did not actually respect this fair value gap. We traded beyond it, but we are pushing up, and we are having this bearish fair value gap that could push price to the downside. So now that price is into this fair value gap, considering that we are expecting dollar to continue pushing higher, what are we going to expect? Maybe this current fair value gap will cause price on the USD CAD to range for some time before deciding to move up or to move down. Because this is the monthly time frame and this is a monthly fair value gap, which means it's going to be a strong area for price to actually deal with. So on the monthly time frame, we are still expecting push to the upside. As you can see, the month is currently bullish. We are expecting continuation to the upside. On the weekly time frame, what we can see is that we'll have this swing low and this fair value gap. This candle is actually respecting this previous week's high. Does that mean that price is going to drop lower? It might drop lower and it might also continue pushing up. We do not actually know, since we are into that monthly fair value gap. USD CAD is actually not the best asset to actually trade. I know that the dollar is high, but because we have a monthly fair value gap and we also have a weekly fair value gap here, this might just act as trapped order flow where we keep bouncing between this fair value gap and this fair value gap, and price will end up being in a range and going sideways. So this USD CAD, if you are going to trade it, you need to be extra careful in order not to be caught up inside that range. Then on the daily time frame, we can see that Friday was actually a very bearish day. We traded below the Thursday low. We traded below Thursday's low. Are we going to expect price to continue higher or continue lower? We don't know. That's why I said that USD CAD is not actually very clear on what is going to happen. So it's better you just leave it. If you cannot decipher what price is going to do, it's better you stay off USD CAD and look for other USD assets that are going to move this week. So let's go to the next asset, which is USD JPY. USD JPY will start on the monthly time frame as well. We can see that we have this bearish movement to the downside, followed by this bullish movement to the upside. But we have this fair value gap that price is already reacting from. Price is reacting from this fair value gap, which, if we respect it, price is going to drop to the downside. Are we actually going to drop to the downside, or are we going to continue up, since the dollar is also likely to continue pushing higher? So let's go down to the weekly time frame. The weekly time frame, if we are going to continue pushing down, the weekly time frame will tell us, or if we are going to continue pushing higher, the weekly time frame and the daily time frame is going to tell us what we are going to expect. So you can see this is that area of monthly fair value gap that we have, and you can see that we are respecting it, and price is dropping lower. We have this week as a bearish week from that fair value gap, means we are currently respecting that fair value gap. And you can see the last order flow leg we had is this one that pushed price into that fair value gap. Since then, there is no other order flow leg that we are creating, and we have a swing low here. We have a swing low, we have a swing high here, and there is no fair value gap. So this is not an order flow leg, because there is no fair value gap that you can actually use as your point of interest. Do you understand? There's no fair value. So this is not an order flow leg, which means this price leg is actually low probability. Price can just easily drop lower, and price can actually move higher from it. So for somebody that trades the fair value gap pattern, I don't actually see reason to trade from this weekly time frame, unless the daily time frame is going to have a fair value gap, which when we get there, we are going to look at that. But for this weekly time frame, I'm not seeing any fair value gap currently in this order flow leg. So this is a low probability price leg for me. So let's go down to the daily time frame. Now, on the daily time frame, things start to get a little bit interesting, because we are seeing some kind of price action that can convince us of price moving back to the upside. So what I can see is we have this we have this break of structure here on the daily time frame with this push to the upside. Now look at the imbalance that we have here. We have this liquidity void. We have imbalances as a fair value gap. You can see this, we have this, and we have this liquidity void also. And you can see that price has actually come down into this area of imbalance. And if you are going to use this, making mistakes, don't want to show that actually. So if you are going to use this as our fair value area, then price can actually trade up. We can see that Friday candle actually started a movement, signifying that the buys might be stepping into the market. So on the daily time frame, we can actually see a glimpse of price moving back to the upside. But for the weekly and the monthly time frame, there is no clue on what we are actually going to expect. So for the daily time frame, we can say that price is reacting from this area of inefficiency, and Friday candle actually closed bullish. So if we get Monday candle also close bullish, then we'll have a swing low where we can start to monitor for fair value gap on the 4-hour time frame, which we are going to use as our order flow leg to trade to the upside. So according to the daily time frame on USD JPY, we should be monitoring for bullish setup. But you know, this is not high probability because the weekly time frame and the daily time frame, they do not actually align. They do not actually align. So this is low probability. So if you're going to trade this, know that it is low probability. You can decide to skip it to save your account, but this is low probability. So let's go on to the next, which is USD CHF. USD CHF. The Swiss franc. So on USD CHF, what you can see is price taking out this swing low here and reject. This month is actually trying to push price to the downside, and we also have this breakaway gap on the monthly time frame. So the monthly does not actually have clear price action on this current range, but overall we can see that price is actually bearish on this one, but we need to know what this current price action is doing here. So that's why we need to go down to the weekly time frame and the daily time frame to see how we can unpack price action here. So to the weekly time frame. Now, if you look at the weekly time frame, what we can see is we had this fair value gap that pushed price to the downside, and we took liquidity and also reversed a little bit. That means we respected this price point, which is a swing low, and we started to trade a little bit sluggishly to the upside, and then bam, this candle comes in. So this candle is like, okay, I don't want to go up, I want to continue to the downside. But this price action is not actually sweet, because you can see a lot of rejection on each of these candles, which is a low probability price movement. So on the daily time frame, what we can see is price move up like this and drop. Where did we drop into? Into this fair value gap here, and you can see that Friday actually starts to trade to the upside, which means we are respecting this price level. Are we going to move up? We don't know. Actually, this USD pair and all the circumstances surrounding USD as a whole is actually affecting all the USD crosses and the USD measures. You can see how the price action, they do not actually correlate. They are just moving the way they want. This one can move this way, this one can move this way. They are not coordinated at all. That is why if you are trading USD, you need to be actually careful, right? You can get mixed feelings and misinterpretation on what each of these currencies want to actually do. You can see we get a bullish sentiment on the DXY, then the US card is telling us that I'm going to go bearish, which contradicts the analysis we had on DXY. So if you're going to trade the USD crosses and measures, you need to actually be careful. That is my advice. So let's go down to the EURUSD pair. EURUSD pair, we are actually like pushing to the upside. We have this breakaway gaps also here, and we have actually taken out this liquidity above this swing high, and we are trying to push to the downside. If we are pushing to the downside, since we have taken liquidity, then this and this becomes the target or the draw on liquidity, where we can actually push to the upside again. So on the weekly time frame, we can see price action actually in this kind of mess, ranging, unable to break above this high, unable to break below this low. So we are just within this consolidation range here. So what we can actually do is, since we are seeing this kind of price action, let's go down to the daily time frame to read them candle by candle. So on the daily time frame, we swept this high and we drop down. We retrace a little bit into this first fair value gap, we drop again. Now we create another flow leg, this swing high, this swing low, and a fair value gap, which is a high probability order flow leg. And you can see that price trade into it. We respected it and bam, we drop. After we drop, did we actually create another flow leg? No, we did not, because there is no fair value gap here. Price retrace a little bit into this price level, and we can see Friday candle actually start to trade to the downside. So if we are going to continue to the downside, then we need to disrespect or inverse this bullish fair value gap, because this bullish fair value gap should send price to the upside. So if price is going to go to the downside, then this needs to be violated. Drop aggressively below it, then retest it and continue. That is the drill. So I'm telling you, if USD is going to continue to the upside, then we should use this daily fair value gap. If we are going to continue to the downside, then we should disrespect this fair value gap aggressively below it and retest, then bam. This is what we should do if we are going to continue to the downside or continue to the upside. So GBPUSD, there is no need to go to the other time frame. I'll just use the daily time frame, since it's almost the same with EURUSD. But what we have here, EURUSD took out this high, why GBP didn't? So this is SMT. So we did not actually take out this high because GBP was weak at that particular time, because I took a trade using this kind of argument. So when we dropped, we created a fair value gap, which is what? A high probability order flow leg. Swing high, swing low, first fair value gap, we decided to respect it and we drop. We create another fair value gaps here. Swing high, swing low, a high probability order flow leg. We retest it and we dropped again. Now, the same price action we had on EURUSD, where we failed to create another fair value gap. So this becomes what? A low probability order flow leg. And you can see how price run deeper into this price leg. Although Friday actually created a bearish candle, which if we are going to continue higher, we should use this first value gap to push higher. If we are going to continue lower, we should also disrespect this fair value gap and drop lower. So this is it for GBPUSD. So NZD/USD, let's check. Now this one we need to go to the higher time frame. So we can see NZD/USD is even clear. This one is clear. Dollar is moving up, NZD/USD moving down. NZD is stupidly bearish and weak. Let me just use weak. NZD is weak. So you can see we have this swing high and swing low. What do we have here? Fair value gap, which is a high probability order flow leg. What did we do? We return into that fair value gap, mitigate it, and we are respecting it. Look at. So since we are pushing down, this little fair value gap should have pushed price to the upside. You can see we actually respected it, but the candle, which was the monthly candle, closed as an indecision. So the next candle dropped and closed below it, meaning that this current month is going to continue bearish, which we can see here. So if this month closes bearish, then the next month should also next month should also be a bearish candle. Why is that? Internal range liquidity to external range liquidity. High probability order flow leg. Fair value gap will retest it where is going to be our target and draw liquidity, which is this swing low. And you can see that there is no PD array within this price leg that is going to stop price from reaching this key level. If we go to the weekly time frame, you can see that the only fair value gap we have here was also disrespected. Here, there is no PD array stopping price. But what we can see is a fair value gap in play that could actually help us to push price down, which is this. We have this as a swing high. We have not actually created this, but we can use this fair value gap to drop lower. So you can see the NZD-USD is even clear on what price might do. So there's no need to actually go down to the daily time frame to look for other flow leg. So this is it for NZD. NZD is bearish. You can trade NZD bearishness because NZD itself is very weak. So you can capitalize on the weakness of NZD to trade against it. GBP NZD, you can also see why I said NZD is very weak. So this is the monthly time frame. What we can see is we are pushing higher. Even a blind man can see that. The weekly time frame. The weekly time frame, we have this swing low. We have this break of structure here. We have this break of structure here. This swing low. We have this fair value gap. Swing low, swing high. What is that? Plus a fair value gap. That is a high probability order flow leg. What did we do? Price came into it, respect it, and we are pushing up. So as of now, we do not have any other flow leg from this swing low to this high. So what we can do is drop to the daily time frame to look for other flow leg. On the daily time frame, we have this swing low. We have not put up the high here, but we have this fair value gap, which is very far from price. This is now a breakaway gap. What we can do is, if we are going to continue higher, what Monday needs to do is drop below this Friday low, take the liquidity and trade higher, eventually closing above the body of this Friday candle. The week, closing above the week is not actually necessary, but what we can do is close above the body of the Friday candle. Then Tuesday will continue the movement. This one is very clear. Then Euro NZD, the same thing. A weekly candle, we actually have what's this fair value gap. We did not actually trade into it. Sometimes this is SMT divergence. No. We actually did trade into this. This is institutional order flow entry drill. You can see we just came below the low of this third candle, which is the third candle of the fair value gap. We came just a little bit below it and we move up. That is institutional order flow entry deal according to ICT. So since we are moving up from this fair value gap, let's check the daily time frame to see if we have another order flow leg, because we have a swing low here already, so we should get an order flow leg from these two candles. The same pattern, we have this fair value gap, but it's very far from price, so this is now a breakaway gap. We don't actually have any fair value gap here. What we can also do is take liquidity below this previous day candle, then reverse to the upside, then Tuesday and the rest will continue the movement. AUD card. AUD card. So AUD card, we can see that we have this consolidation. We have this consolidation, but the overall price is actually bearish. We can see actually bearish. But let us zoom into this current price leg, which is this. From here, we can see we took out liquidity. After that, we start to trade to the upside like that. Then if we go down to, okay, since we have taken liquidity below here, what is going to be our next target? You can see there's no fair value gap that we should retrace into. So our next target should be this swing high, external range to internal range, but there's no internal range. We have also broke structure above this key level. Then the next target should be this external range, which is this swing high over here. So if we go down to the weekly time frame, we can see after we took out liquidity, we close above this high, which is what? CISD, change in the state of delivery. So if we are going to continue here, then we need to look for order flow leg. So let us define our order flow leg. I can use this, I can also use this, but let me use this for now. We have a fair value gap that is untested, but it's very far from price. I don't think price is going to come into it for now. So I'm going to use this swing low and swing high. Between this price leg, between these price points, which is the swing low and the swing high, what do we have? We have a fair value gap on the weekly time frame. So what price may do, or what price can do, is drop into this fair value gap, respect it, reject. When rejecting, we need to see fair value gap within that bullish price leg that is respecting this fair value gap on the daily or the 4-hour time frame. So I'm not going to go down to the daily time frame because I've seen what I'm looking for, which is this fair value gap. All I need to do is wait until we get that drop into that fair value gap. Wait again until we get that respect candle. Until we get that respect candle to look for potential setup to the upside. Or wait for this respect candle, then look for potential setup to the downside. Either ways. So let's go to AUD JPY. AUD JPY, we can see price is actually like so moving to the upside. What we can notice is we took out this swing low here. The only fair value gap we have within this price leg is this, which has already been mitigated and it is no longer useful. The only useful aspect of this price leg is this swing high here. So if we are taking external range liquidity and there is no fair value gap, what we can do is to target external range liquidity or this internal range liquidity also. But I prefer this one. This is like a low hanging fruit. The first objective, then this one, the second objective, in case we decide to push to the upside. In case we decide to push to the upside, right? So this is the monthly time frame. We are pushing higher. So let's look at the weekly time frame. On the weekly time frame, we took out this price point, which is our CISD. After that, we respected this fair value gap and we push up. We create a swing low, create a swing high. If you look at the midpoint of this price leg, we have what? Area of imbalance, where we have fair value gap, volume imbalance. So you can see that price traded into this price leg, into this price point, and we are rejecting a little bit. So what we can do is to check if we are going to continue the movement. Since we are respecting this price leg, we'll go down to the daily time frame to look for that. So on the daily time frame, there is not much action going on. What we can see is that respect that we are having on the weekly time frame, which is this Friday candle. So what we can also expect is Monday candle to trade higher. Since this is already trading higher, Monday candle should also trade higher. Disrespect this fair value gap and trade higher. That is what I want to see on Monday. So if we are going to trade higher, this is our target for AUD JPY. I hope you are taking note. Guys, take note on each of these assets, the direction we are expecting to move. It will guide you on your further analysis. So the big boy, which is gold. Gold passed my phase 1 for me. So on gold, the monthly is very bullish, we know. The weekly is very bullish, we know. So let's deal with the daily time frame. So on the daily time frame, what we can see is this swing low and this high. The swing has not completed, so this is just a normal high. Within this price level, we have fair value gap, which is very far from price, which I will tag as what? A breakaway gap. We have also this one and this one. But if you look at Friday's candle, we can see that we came into this fair value gap and we are rejecting a little bit. So if we are going to continue higher from here, I want to see 4-hour fair value gap stacking up while we are moving higher. So that is where you can actually take a position, stop loss, and target 1 to 2 at minimum. So this 4-hour fair value gap here, normally we should expect this to push price to the downside, but because we are respecting the daily fair value gap here, we can expect this one to be disrespected since we are going to push higher. Gold is at the all-time high here, so we should expect that continuation of bullishness to continue. Before I forget, I want to draw your attention to something. What you should consider while trading gold is seasonals. So look at where I'm going to draw this arrow. This is where you can find your seasonal on TradingView. So guys, if you look at seasonal, this blue is 2025, this green is 2024, and this orange is 2023. If you look at where we are, the month of October is usually the month where gold and silver tend to retrace from whatever price action they have done for the year. But are we going to retrace? That is what we don't know. So as a trader, your work is to follow what price is giving you. Do not actually try to be smarter than price. Follow price. Allow price to tell you what is going to happen. So we don't know if you are going to retrace as we did in 2025, 2024, and 2023. But let us monitor what price is going to do. So silver, the same thing on silver. I think silver will have a 4-hour fair value gap. We have a 4-hour fair value gap here. Why I am marking this as a fair value gap is silver usually do deeper retracement. So silver might decide to drop lower into this fair value gap before starting to go up. Usually when gold is here, silver will be here. That is how they move. They don't move actually together. When gold is here, silver will be here. So there's tendency that silver might decide to drop before moving higher, or look for daily fair value gap here, drop, then move higher. So let's go to the daily time frame. On the daily time frame, there is no fair value gap we can see, so we should expect maybe that weekly fair value gap to be mitigated before we move to the upside. Just monitor what price is going to do. That is what I'm going to do also. Look at what price is delivering, then make my decision from there. So the next asset is Bitcoin, BTC. So on BTC is actually quite interesting. What we can see is that after we respected this fair value gap, we created a swing low, then broke structure, then created a swing high. The swing high is not actually confirmed because of this candle has not closed and we have not made the swing high actually will be confirmed by November's candle. So you can see that we're having a huge retracement. So, and we have this fair value gap, which is area of interest or point of interest that price might decide to target since we are pushing heavily down. So on the weekly time frame, you can see we took liquidity above that key level, then we are closing below this key level. You can classify this as change in the state of delivery, and we are also closing below this swing low, which means there is room to trade to the downside. Since we have this downward movement, let's confirm from the lower time frame if we have institutional order flow piling up within these two candles. This is the daily time frame. On the daily time frame, this is those two weekly candles. This is those two weekly candles that we saw on the weekly time frame. So this is a fair value gap on the daily time frame. We actually respected it, put up a swing high, and we are already making a swing low. So for me to continue bearish with BTC, I need this fair value gap on the daily to be mitigated. From here, this is where I should be getting ready to participate in BTC bearishness. Or if we don't get into this price level and drop lower, I will be looking at other fair value gap within the new candles that we are going to create in case we do not go into this fair value gap. But I'm looking at this fair value gap as a potential area where price could drop lower. So guys, this is the analysis I have for you this week. You cannot trade the forex market without knowing how the week is going to be, and that is why you have your Saturday and Sunday to make those analyses, to know how the week is going to be with your analysis, and you prepare ahead. Guys, this analysis is very subjective. You can make your own due diligence as a trader to get prepared for what is coming in the week. Guys, if you have not subscribed to my channel, please make sure you subscribe, like the video, and hit the bell button so that you get notified whenever I drop a video. I wish you a very good trading week. See you next week. Bye.